for those who are listening or think that you have to have a lot of money to start in the stock market, I'm gonna tell you that's like completely false. So like, for example, last year, I'll tell you some stats that I had because I just got my tax returns back and I was looking at
1099s.
Exactly. Yeah. I was looking at 1099. So like, hey, I remember.
We won't talk about that here.
so for example. Hey. Well, like just like for example, like I started with one of my accounts last year, my trading account, which I just strictly use for trading. Right. I can use my riskiest trades or whatever. I started with $600, and the highest I ever got in that account last year was $15,000.
What's going on, people? This is Nigel.
This is Brad.
This is the Uplift Fitness Club podcast.
So you done gained all this knowledge. You got all this knowledge. It sounds like it's taking a lot of time.
Yeah.
How much time do you have to put into these stocks?
Yeah.
Let's talk about these
stocks.
That's what we came for, man.
That's what we came for. That's what we came for. So, essentially last year, of course, it was COVID, and you know, a lot of people like myself were out of work, and I was in school getting my master's in design. So I took the extra step and then got my master's because I want to be able to teach these skills essentially in universities. Like one thing I seen, like a lot of people who, like I said, study social sciences, sociology, psychology, they don't use their degree. I want to be able to bring these courses into our university. So if it's Bowie State or Morgan State, who have a lot of people that studying these disciplines, if I can have like a capstone course, then that's my portfolio piece. You know what I'm saying? Essentially. So like last year was of course, like I said, a lot of us out of work, a lot of free time, staying at home, and that's when I started to really put my foot forward within the market. And I've been studying the stock market and like understanding like what the global economy is since I got to school, maybe like when I was at Morgan. My dad has always been someone that's like interested in the news, and like, you know, he always used to make me like read the newspaper when I was younger. He's from Pakistan, so
torture.
Like, he's from Pakistan. Like, if y'all know like any like if y'all know any like foreign parents, they love the news and they really like.
My mother's Jamaican. That's
your mama love the news.
Love the news.
My mama love the news. She's from America though.
yeah.
So I don't understand, bro. 24/7, bro.
So and it's like different forms of the news. Like what I say with like foreign parents, are like different types of like BBC World News. My dad's he's from Pakistan, like I said. So like we watch a lot of Al Jazeera. A lot of stuff that have like unbiased, un-American perspective from the news. And I think that really helped me understand how to navigate on the stock market. Because I say that because you have to really think from a different lens and a different perspective, because the last thing you want to do is invest in something because of bias, or you know, you hear stuff of bias and it can alter, you know, your critical thinking or like your creative thinking essentially.
The first thing, bro, I'll be looking at, like you said, bias, is that first off, like half the country got iPhones, right?
Right.
Every iPhone got the stock app on there.
Yes.
I probably had an iPhone for 6 years before I opened that app.
Yeah.
Right. Now, I imagine most people don't even know what that app is, and if they look at it, they'd be confused.
Right.
But you look at the news on there, and you know, I used to look at it and be like, oh man, oh lordy, I get real slave. Oh lordy, I don't want nothing to happen. But then when you start to think about it, you like look at what happens after this piece of news comes out. A lot of times, just like ESPN, bro, when Stephen A. Smith say the Clippers are gonna win the championship, you know it's 100%, almost 100% they ain't gonna win the championship.
Right.
You know what I'm saying? They're saying equities is going down, all this stuff is happening, There's about to be a correction.
Yes.
9 times out of 10, like you said, the bias, they might ultimately be giving you something that was fed to them.
Yes, exactly.
Yes.
Yeah, and that's a large thing. Like and then another thing is, to that point, And it doesn't have to be the news. It can be actual hedge funds,
Absolutely.
different banks, institutions, to throw out different articles to make some sort of negative review of a company to force people to sell their shares. So if you for stocks in general, so let's take a step back before we get that. Stocks are basically equities of companies. So when you buy a share of a company, you essentially own a piece of it, right?
Absolutely.
So that's a reason why I think everybody should at least take advantage of the stock market, because it's the free and open economy, and that's really what they're saying. Like, anybody has the luxury to own what they feel is as if they should think that should stick around.
Right.
At the same time, we have the luxury to make business fail if we don't want them to stick around. And you see that a lot with the stock prices going up on good news, or for instance, like BP, when the oil spill, like I'm pretty sure their shares fell drastically. Right? Because it's negative. And when it's negative, when you sell something, the stock price goes down. And once there's more buyers in the underlying equity or even cryptocurrency, the stock price go up.
Right.
So, for example, a good example is Dogecoin. Dogecoin was less than a tenth of a cent for like 5-6 years.
Hey, bro, you bought Doge in December?
I bought Doge in December and I sold it.
Oh my God, bro.
I sold it and.
Hey, bro. And then, but what really got me, like, it wasn't the first peak or the first spike. It was like the first jump. I'm like,
the first
12,
one to like 9 cents.
Yeah, it was like 12, something like that. I'm like, damn, I missed it.
And then 20 cents.
I'm like, damn, I missed it.
and then they hit 45.
Right, I'm like, damn, I missed it. That joint at like 60 cents now, bro.
Yeah,
I was like, man, you know, I bought something yesterday.
Time out. So the funny thing about this is I try to hold this information away from my dad. I knew of Dogecoin a while ago.
Okay.
I didn't mess with they call altcoins.
Altcoins, yeah.
I didn't mess with them that much because a lot of times there's no use for them, right?
It's like penny stocks.
Exactly. Yeah. Like it's high risk, high reward.
For sure.
And you know what I'm saying? Like, I started making like my dad accounts, like his employees. Like, I started like managing their account or like recommending what to buy for him. He called me the other day and was like, sell all my stock. I want to buy the coin with the dog on it. I was like, I take a look at the jump 66 cents.
Oh, like, yeah, nah, bro. That's the peak. Well, that was, I ain't gonna say it's the peak because I thought everything else was the peak.
Yeah.
But yeah, bro.
Yeah, but there's a saying always, it's like, you can buy low and sell high. What you want to do, you want to get the best position and sell high. But there's also a time where you can buy high and sell higher.
Yeah, sure. Or okay. So I thought you was going short selling. So talking about
I can short sell too. So let's go back to the stock market. So yeah, I got in it last year, and I used my unemployment money, right? And
smart. Hey, you a monster.
So I use my unemployment.
Got your wages cut and start trading with it. What the hell going, bro?
And then the great thing about it is I filed for unemployment. It took me like 2 months to get it. So like as soon as I got it was that back pay. It was that back pay. I was like, yep. Let me hit it. So like from what am I going to invest in? Right. First thing, what am I going to invest in?
At what time? I don't mean to cut you off. What time of year was this? Like what month?
So I was buying equities 2019, which is essentially the year before. But I started like in like the summer that year.
That's when I started, bro.
Yeah, it started.
I was day trading though. Matter of fact, we talked about it.
We talked about day trading.
Go ahead.
And then like me
went broke day trading, boy.
I was overseas at the time. I was overseas at the time. And now she was hitting me like, bro, I just.
Because I was texting him the wins.
Yeah.
Right? And I'm floating. I put 2K in there. I'm floating like 21, 19, 21.50, 17.
Yeah.
Bro, I lost about $1,300. Go ahead, bro. We can go all the way off track. All right, so you said summertime you started.
Summer of 2019.
Right.
And I was like putting money here and there. And what put me ahead of the curve was I just used that knowledge of like understanding what the world news is, understanding how politics are involved with equities, seeing how the world economy essentially is all in one, and just understanding how things work in one cohesive unit, right? So, I like to read, like I said, and I like to read world news. And I came across a bunch of articles a few years ago that was saying like China. I'm gonna show you how how my first investment came, and then how that first investment matriculated to other investments.
Okay.
Right. So I'm reading world news. I'm reading from some Chinese news. China wants to become the world leader in renewable energy. They want to cut carbon emissions. They want to do X, Y, and Z. We know that China has like the highest, population of people in the mainland, right? So I'm like, damn, if they want to become the world leader in renewable energy, they want to, stop global warming, and they want to, cut their carbon emission. They have 1 billion people.
Cars.
Yeah.
NEO.
That was the first one.
NIO.
That was the first investment I had.
God,
I invested in NEO when it was $1.90, and I followed that company. I would listen to their earnings report. I would listen to everything, and from there, like now NEO went as high as $60.
$60, yeah.
Now it's like 30 something.
But still, yeah.
So that was one of my first investments. So now I'm invested in the electric car. Electric car field.
Yeah.
So now I'm like, all right, what are some materials needed for electric cars? So the first thing I know off rip of electric cars is the battery.
Battery, right?
Right. So now I'm like, all right, so there's not so much I can invest in a battery. I can buy Tesla stock. I can buy Samsung. Okay, cool. But I'm like, all right, lithium. Lithium is a main component of electric vehicles. So then I started buying lithium stock. So it's stock like CBAT, Levent, a lot of like, it's another.
Hey, spell them Jones real quick, bro.
So CBAT is the ticker is CBAT.
I want people to be able to,
so this is
see what you're saying. You understand what I'm talking about?
So this is China Bach Company and Corp.
Okay.
And it's a storage battery manufacturing company.
We still in China. We ain't even left China yet.
We haven't left China yet.
Okay.
So as you see, I bought this.
I'm finna buy this right now.
Yeah. So hit the 1 year chart. Hit the 1 year chart, and let's just talk about perspective. So I started to buy this stock last year in June during COVID.
Right.
At that time, the stock was 73 cents, and I sold the stock when it went up to about $9.
Yeah, that's a good chunk of change.
So, and what you will see as well is that there was a sort of a shift in the investment world. Like if you go to that high mark right there, it's in November, and you'll see a lot of like renewable energy, electric vehicle stocks, solar companies. They all boomed in November because of Joe Biden election.
Because liberals are more into that. Makes complete sense. And you know what? I bought Tesla in like October. I thought I was a genius because it doubled.
Yeah.
And I thought Tesla another one of them ones. I was like, I missed it. Damn! I ain't miss it. Yeah. Now I missed it.
Yeah. So then I started to invest in like a lot of renewable companies, and a lot of growth companies. The reason why I looked at a lot of growth companies last year, there's a full list of this, and it's a long list to give out now, but like growth companies are companies essentially like startups, or they're companies that operating at some scale, but maybe their profits, they don't turn profit, or something. They're just up and coming. The reason why I invested in a lot of growth stocks last year was because interest rates were very low. The 10-year treasury yields was low last year. The 30-year treasury were low last year. And essentially, this is good for growth stocks because in those yields really translates into interest rates, right? So those treasury bonds, the 10-year, 15, 30-year, if you look at those numbers, they resemble mortgages.
Right.
You can get a 10-year mortgage, 15-year mortgage, 30-year mortgage.
Yeah.
Right? So when the treasury bonds are lower, which means people aren't investing in the U.S. economy.
Right.
Those
They
interest
got
rates.
cash.
Yeah.
And they want people to finance, so they lower interest rates, right?
Somewhat, yes.
Okay.
So essentially, how I perceive those bonds is that it's basically confidence in the market, right? So if those bonds are low, it means that people don't have a lot of confidence in the economy, and the reason why, because of COVID, right? But at the same time, interest rates go lower as those treasury bonds go lower, because there's not a lot of interest. Like a bank can't deal out interest if people aren't investing in the economy. Right. So that's a good thing for up and coming businesses and companies that's on the market, because, like I said, they don't turn profit. They don't make a lot of money. So essentially, they have to borrow from banks. Now, if they borrow from banks, the interest rates are low. It's good for their balance sheets. They're able to invest in their company at low interest rates. Right? So that's
now, when you say invest in their company, you talking about like buying materials? You talking about literally buying shares in their own company?
both.
That's
So a lot of times CEOs they
boy.
buy back their own stock,
okay,
right?
and that drives the price up.
It drives the price up.
And now, on top of that, it drives up interest because the price done went up. So people trying to capture those earnings.
Yeah, so it doesn't the interest doesn't really play in its part. It's a matter of they able to borrow money from banks, and
Right.
the money that they borrow, they reinvest that money into their company.
And the capital gains or the money they make is higher than the interest rate.
Yes, because
Right.
the interest rates are so low.
Makes
But
complete sense.
as those interest rates go back up, as you see now, like a few weeks ago, you see that these stocks, growth stocks, are starting to suffer just a bit. So the stock market is at an all-time high. But if you talk to a lot of people, like, man, my portfolio been down for the past 3-4 months.
Right.
It's because a lot of us, we take the risk of investing in those growth companies. And as the interest rates sort of shift, you'll see a reflection of that. Now, that's not to say that's a bad thing, because a lot of these companies will be successful and a lot of them won't. So if you're able to do the research and your due diligence, you maybe catch like a Neo like myself, where they weren't having a lot of like sales over time, but they started investing in themselves. A lot of people started to invest in their company, and now you see something that's like really taken to form.
Right. So we talking about kind of identifying, good companies that you might want to invest in.
Right.
Based on world news, understanding the economy, and just looking for things that might signal like, okay, China trying to be the world leader in this, I'm gonna cop up the electric vehicle stock. But let's say for the more basic investor, like the entry level investor, maybe you're not necessarily interested in doing due diligence. Like you want to just get invested in the market because you ain't getting no money in your bank account.
Right.
So what would you advise for that type of investment?
So there's, if you ever heard of ETFs, essentially ETFs are what composes of our 401k, everything else. So ETF is an exchange traded fund.
Right.
And basically it's a portfolio of smaller stocks. So if you ever heard of the S&P 500 or the Dow Jones,
Right.
so the S&P 500 is essentially an index of the top 500 companies in the stock market. You can buy an ETF of the S&P 500.
Right, SPY.
SPY.
Hey, that lady right there, ARK.
Kathy Woods.
Hey, bro, she's losing me money. And I just bought that like a couple days ago. I seen it took a hit. I was like, nah, I got to.
Yeah.
That junk kept going down.
It kept going down.
But so, okay, All right, so I'm this is what I'm into more so. Like I say 70-80% of my portfolio is ETFs, and then 20-30% of it is just whatever. Most of it was like, okay, it's Corona. What's gonna be hot when the streets is lit?
Yeah.
When everybody come back out their house, what they gonna be doing? They gonna be flying. They gonna be driving.
Yeah.
That was
good.
my whole. That's as deep as I went with it, right? But I think the majority of people, because people don't like to read, people don't like to watch the news, especially of our generation. But also like that mindset. Like, what do you do when you see like ARK? I had ARKK. Bought that joint a couple of days ago. I seen it hit like 112. It's at like 105 today. I done already lost money.
Yeah.
What's the mindset? You know what I'm
The
saying?
mindset is that you never bet against the U.S. market. No matter what, the U.S. market is always going to go up.
You got to believe that, right?
You have to believe it, and the way you believe it is you see throughout time. Let's pull up a chart, right? And I'm going to show you a chart of the S&P 500 throughout time. Whenever there's a major correction or there's a downfall in the market always rebounds.
Tell the people like what specifically, what's a correction?
I'll say a correction is when the indexes fall at least 5%.
Okay.
And in the terms of, let's just look at the SPX, and I'm gonna show you what I mean. So let's just go through a monthly chart so that we can get a big grasp. So let's look. In 2009, on the housing market crash here, you've seen that the stocks rebounded almost immediately, right? And then we have another correction in 2011, and stocks rebounded immediately. 2015, there was another small correction, and stocks rebounded immediately. And then most recently in COVID, you've seen that the stocks rebounded immediately.
Right.
Now we can see this throughout time. Even the .com boom in the 2000s,
That's like
the crash.
Y2K, right?
Yeah.
Yeah.
So after the .com boom, you saw that the stock market increased immediately. There was another correction here. I say 1989. You see 1989 here. There's a dip here, and the market rebounded almost immediately. So every time there's a dip in the market, it's dip correction, or like you'll say like a pullback.
Okay.
Not necessarily like like major crashes too.
Yeah.
The stock market always rebounds, and you can like with stocks, you always can look back at what history gives you to see what's the outlook forward. So no matter what, I gave you a case study, let's say to 1989, 87, that's almost 40 years.
Right.
Of every time there was a correction in the market, even here, there was a continuation.
And we talking about within maybe 2 years, if you just stand pat, you don't touch it, it's gonna come back.
It's gonna come back.
And so I heard a stat where like if you invest in the stock market, let's say just basic SPY, right? S&P 500 index fund. If you hold it for 10 years, it's like an 80% success rate or something like that.
Yeah.
If you hold it for 20 years, it's 100% success rate. That's basically what you're saying.
Yes.
So for the person who is going to be passive, who's not going to be reading charts, doing analysis, they're basically implementing like dollar cost averaging.
Yes.
Just throwing money in once a month, once every 2 weeks. They just need to set it and forget it. Don't even look at it.
Forget it. Yeah.
Okay.
And then another thing about those who don't want to do too much like technical or like due diligence, and they just want to invest, you can find those ETFs. There's plenty of ETFs for all types of things. One of my favorite is it's called Global X.
Oh, you about to put me on to something.
Global X ETFs, and they have an ETF literally for everything. So let's just go through their ETFs, right? Explore ETFs. They have one for U.S. infrastructure and development, lithium and battery tech. We said that. Robotics and artificial intelligence, U.S. preferred, cloud computing, silver miners, copper miners, autonomous vehicles, autonomous and electric vehicles, super dividends. This is one of my favorite. Super dividends. So this is a ETF of all the top dividend paying companies. and they pay you dividends monthly. So I started buying this when it was $11, and every month they pay me 10 cents per share for this ETF. So for 20, let's put this in perspective. This is right now a $20 ETF. If you buy one, they give you 10 cents a share for every month. So essentially, for one share for $20, they pay you $1.20.
Right.
That's how much. I don't remember last time I got $1.20 on my savings account.
What percentage? Right. What percentage is that?
It's almost like
7%.
It's almost like an 8-9% dividend yield.
Something like that. So we talking about, I mean, the market, we know, adjusted for inflation, it rises about 8% every year, right?
Yeah.
Because it's 9.6% inflation. Let's just say it's 2%. Even though I've been hearing, bro, inflation is about to go up. That's what I heard.
Yeah.
I don't know how real it is.
I think it is.
Right. So we ain't even get into that, right? So we talking about an ETF that is paying you, you know, we know that the wealthiest people in the world get rich off of starting their own business, real estate, dividends, capital gains, and then their primary source of income. So that's, but I ain't never heard of no dividend paying you like that. Like, you talking about, it's almost mirrored in the stock market.
It's mirroring the stock market, essentially.
Right.
And I'm pretty sure, like, if we go through their holdings, I'm pretty sure essentially it has like the larger dividend paying companies such as like banks and probably those like Vanguard, S&P 500.
And that's not even to mention the fact that the price done went up since you got into it.
Yeah, so I bought this essentially like a year and a half ago, and it was 11 cents a share. Now it's at $20.
$11 a share?
Sorry, $11 a share.
And that's so the price went up about 40%.
Yeah, so now I have liquidity in the actual asset as long as it, and with the residual income I get from the dividends monthly. It's a monthly ETF.
Right. And this is not like, there's no expectation on you after you buy this dividend stock or this dividend ETF.
Yeah.
So when we hear the word residual income, I'm glad you said that word, because I had to look up the definition, because I'm sure you hear it used a lot.
Yeah.
Now, residual income is income that is received after the completion of the income generating work, right? All you did was just buy the ETF.
Yeah.
And now you get residual income.
Yes.
Okay, just
the work is already done.
Boy, all you did was push a button.
Yeah.
Now you get money.
Yeah.
Now when we talk about, some people, I'm not even gonna go back to this, but we did an episode on MLMs and network marketing.
Yeah.
And that word is used oftentimes, but it's like, I don't know of an easier way. Now they do get legitimate residual income sometimes. I don't know of an easier way of just clicking a button and now you getting 8-9% off of dividends plus capital gains on top of that.
Exactly.
Yeah.
And I would say, like, for those who are listening or think that you have to have a lot of money to start in the stock market, I'm gonna tell you that's like completely false. So, like, for example, last year, I'll tell you some stats that I had, because I just got my tax returns back, and I was looking at
1099s.
Exactly.
Yeah.
I was looking at 1099. So, like,
hey,
I remember.
We won't talk about that here.
so for example. Hey. Well, like, just like, for example, like, I started with one of my accounts last year, my trading account. I have a long-term account, which my ETFs.
That's that, like, retirement.
My long-term stocks, I think that's going to be really good. That's not risky. That's my long-term portfolio. I have a trading account, which I just strictly use for trade. Right. I can use my riskiest trades or whatever. Just for example, my trading account, I started with $600, and the highest I ever got in that account last year was $15,000, and that was just from trading.
Now, this due diligence right here.
This solid due diligence.
This ain't just I'm waking up, I'm looking at the top 10 movers.
Yeah, no, this is,
and which one done gap down, and I'm gonna pick that one, put everything on that one. This is like you actually putting in work.
Yeah.
Because I've been in full disclosure, like, so do you still do the weekly calls?
I was doing weekly. I'm starting back up.
Okay.
Work been hectic, but I'm getting back into it.
Ain't even worried about, but like just the fact that I jumped on the weekly call. I'm like, okay, this is my boy. I know he into this, and we talked about it. When I'm on the call with you, bro, I'm sitting there like, bro, if I was not into this, boy, I'd be tuned out, bro. Because it's so much information, and you don't know what, if you're not really abreast of like what you're actually listening to, or you never looked at a chart, it can just be overwhelming.
Yeah.
But the fact that you're willing to put in that work, you see the benefit that it gives you.
Yeah, exactly.
You know what I'm saying? And it's not always like that.
It's not. Yeah.
It's not always. You got to be willing to risk something in order to gain something.
Yeah, exactly. And that's the biggest thing. Like, you can either get in the market with what you have or you don't. But it's how much you put in it is how much you're willing to risk. Because at any given time, you gotta be willing to lose it all.
Right.
Like one day, like some shit can get delisted, and like you ain't getting it back.
And then with this is another thing I wanted to tell the people. Like, it's important to be invested, but it's also important to have cash reserves.
Yeah.
Because you think about an opportunity like last year. Me and Brad talked about it a few times. Like, the market went down 40%.
Yeah.
If you didn't have no cash on hand and you just had to hold your positions, or even worse, if you sold at the bottom of the market, then you just missed out on the opportunity to go like exponential.
Yeah.
But you know, if you're strategic about the fact, you know, keeping money on hand to where if something does happen, like a 5 or 10% correction, now this is like, hey, you should be frothing at the mouth. We talked about flipping your mindset to where, you know, when you lose some money in the stock market, you got to think of it like, hey, this is a discount. Because if you got it for one price and it falls 10%, you should love it for that price.
Mm-hmm. Yeah, so, exactly. You have to be willing to. I told someone, you would have to be willing to hold, like, if let's say you have a position and, you know, the market goes down and your equities go down 30%, if you know, like, long term, the company is a good company and there's use for it, and you know your confidence is that it will rebound. If you're not willing to hold it when it's down 30%, you don't really deserve it when it's up to 30%.
That's like, if you don't rock with me at my worst,
yeah,
you don't deserve me at my best.
Yeah, and to that point, like, it's just opportunities. Like, market goes down, your stocks go down. Buy more at a lower price. You get more, and you can. But at the same time, like, if it's that's different from a long term. I'd say a long term investment strategy to something that's a trade. With trades, I feel like, you know, if it hits certain marks where it's like I'm willing to risk 10% at a loss, cut your losses, and just find another opportunity.
Oh yeah, for sure.
For trades specifically. And
that was really we got wrapped soon, but that was really my downfall ultimately with day trading. Yeah. It was like, one, talk about due diligence. I'm doing what I was taught, but I'm not going no further than that. Yeah. And then it's the emotional component that's associated with it. It's like, well, when you get into them trades and you ain't, let's say you got 5,000, you put 2,000 in the market. You're not gonna be comfortable. You better be comfortable with losing everything.
Yeah, you have to be comfortable.
Because you might lose everything, especially if you're doing what I was doing, which is going whole account on one company. Well, I'm like 7 on black.
Yeah.
Hey, put the money on the table.
There's some people that I realize, for those who want to get started. There's some people. There's someone I like a lot. His name is Stock Dweebs. And he has a premium account. So each week he gives you a weekly top 10 pick.
Stock Dweebs.
He has a weekly top 10 pick. He'll go over analysis of the S&P 500, because you have to be aware of where the market is going to go. Then he gives you direction, like charts, different charts. So this week's top 10 stock picks goes like this. He tells you buy zones, where to cut your losses.
Oh, this can't be free.
The top 10 are free. It's free. The top 10 are free.
He give you the top 10 picks for free with buy zones?
Yeah. So look, so this is the buy zone, and then these are his right. So right now, this is where when he made the chart. All you gotta do is press play. It updates, and you see that Roku we looking at dropped below his stop loss area.
Right.
So essentially, what I'm thinking is, okay, he thinks that Roku has an upside of 30% from this mark right here at 315. He said there's an upside. It dropped to 370 something, 385 now. So essentially, what I'm thinking is, okay, I'm gonna go in and buy it here.
So you saying it has an upside of 415?
He gives me the price target at least.
So it went to 275.
Yeah, 275.
Okay, so it dropped off like $40.
Yeah.
Okay.
So and so like I just go through his. This is how I started as well. Like I leveraged him in some of my trading accounts.
And these are really familiar names. We got Nike.
Yeah.
I see AMD all the time. I don't even know what AMD do, but
They
I know
do,
they always in the top list somewhere.
Yeah, AMD is a semiconductor.
Okay.
So let me show you. There's a platform I use called TradingView.
I heard of this before.
Yeah. So TradingView, and what I do is before this is a new format that he got from a website, but essentially he was just doing all his reviews on TradingView. Not bad. I know we gotta go soon, but let me just show you some of his previous picks from like.
Then I'm gonna ask you again. This can't be free.
This is 100% free. So
we looking at all these picks, all these different companies, all these stocks. You mean to tell me he giving you analysis and picks for free?
Yeah. So every Sunday at 9 a.m. he gets a YouTube video of the weekly analysis. He gives you a chart to follow, and no matter what, like we're looking at Camping World from September, right?
Man.
Yeah.
You see, this is when he made the chart. All you
I'm
gotta do is press
gonna
play.
cut the podcast off. You keep lying.
All we gotta do is press play. And look at that. It hit his buy zone. It hit his sell zone. Essentially, like this was his buy zone, and you can sell it here. There's some crazy jumps in here. Let's go to some other crazy ones that he had. Slack. He called it out. This is your buy zone. And you see how well his technicals are, like they're pretty good.
All right, we got to wrap, but this is what I keep saying, like, is it free for? Because you got organizations that will say, pay me $235 up
This
front,
is 100% free.
$175 a month, and
Yeah.
we're gonna give you the machine that's gonna do your picks for you, and all you gotta do is press buy. We all gonna buy together. We just got 2 free resources of how to trade. If you're interested in day trading, or you interested in holding overnight, getting in and out of the market, this is the person who's giving you a free resource.
Yeah, so stock doing it's more so like swing trades, which you want to hold for
overnight or a couple days.
Yeah, essentially days to weeks.
Okay.
There's some other people that I say day trade, but I don't recommend day trading unless you have the substantial account, you have the psychological resiliency.
Yeah, that's the other thing.
Else.
Only being able to do it 3 times a week is like, boy, you better be right.
Yeah,
you better be right.
So the pay he gives you long-term picks, which is a long-term portfolio, and then also he give you picks stocks that's under $30.
Okay.
And then also on top of that, for the premium he gives you email of like ETFs to buy,
Right.
More charts to look at essentially. So like one of these long-term picks he had was GameStop. He gave it out on December at $17.
Yeah, bro. Yeah.
There's some other ones. Pinterest last year during
Pinterest
COVID at
definitely
$10. Pinterest,
Target.
Target.
One of the fastest growing social media, Johnson. And you told me that last year.
Yeah.
Just based off his girl be using it.
Etsy. Etsy is another one.
Yeah.
Etsy. So this guy's he's solid. Every week is a top 10 pick.
Yeah, this is real information, bro.
Yeah.
How we want to close it out? Basically, like I love the fact that you're putting people onto actual resources. We all about like tangibility. You know what I'm saying? Like, exposing people to, things that can improve their situation in the short term and the long term.
Yeah.
With a low barrier to entry. That word again. So I definitely appreciate you dropping gems on us, because hey, we was talking about, Lord, you ain't even know. We was talking about, hey, we gotta get into these stocks because we got positions, but it ain't.
Yeah.
It's that passive. You know what I'm saying? We gotta really get on, some of the stuff you was mentioning, and do our due diligence so that we can take advantage of a lot of these opportunities.
Yeah, no doubt.
Go ahead.
So this big game, right?
Big game, for real. So close out. Let the people know. I guess where to find you if you're gonna be doing the weekly Zoom chats. You know what I'm saying?
So the best way to reach me is through social media. I like Twitter the most. So if you catch me on Twitter, it's at Isahq ISAHQ11 on Twitter. And Instagram, it's Isahq ISAHQ_RANA on Instagram. If you reach out to me via DM, if rather it's like some insights on like equities or user experience, just ping me. And sooner or later, I will be having those classes, those stock classes where I at least go over like 30 different stock. I do like analysis from a charting perspective. What's their sector doing? So I try to give us like as much insight so that you can make the best trades or like investments possible. Long term, I like to do long term and like short term trades. So like if you want to trade for income, I can like show you my methods. But then long term, I can like give you exposure to different stocks and companies that I think long term are like really good. Okay. And essentially just answer questions. If people want, like a lot of times people want something charted or they have something, they want some advice or like what I see, I do that as well in those classes. So it's really just a way to.
And I'm gonna ask you again.
Yeah. The class is 100% free.
It ain't no way that's free.
The class is 100% free. I do ask for like if you want to donate. You know what I'm saying? I like drop my like Cash App and all that, but like essentially, my mentor is like the best way you will find like some good karma and like stuff to come back to you if you provide it for free. So like, man, just sharing my knowledge, I feel like it works, you know what I'm saying? So
for sure.
Those classes are 100% free. All you gotta do is show up.
Hey man, God bless you, man. We appreciate you.
Yeah, no doubt, bro.
For sure.
No doubt.
And you always welcome to come back. You learn something you want to share with the PA. You welcome.
Yeah, definitely. We definitely gotta come back. We definitely gotta come back.
For sure. All right, bro. Good chopping up with you.
Yeah, same thing.
Write it down. You can't wait your whole life to make a change. Believe in yourself. Innovate with integrity and intentionality.
I hear you. You know the problem with you little niggas? You think you know everything about the damn world, and you don't know shit. Now, I see you got yourself a little business going. Well, that's good. That's good. You make that paper. But when you're making paper, you gotta learn some rules to go with it. You gotta learn the difference between guns and butter. There are two types of niggas in this world. There are niggas with guns and niggas with butter. Now what are the guns? The guns, that's the real estate. The stocks and bonds. Artwork, that appreciates with value. What's the butter? Cars, clothes, jewelry, all that other bullshit that don't mean shit after you buy it. That's what it's all about. Guns and butter, baby. You little dumb motherfucker.